Good morning, guys. How everybody doing? Today's Friday. On another stream here by me. Ways to post questions on the chat. I just happening in the morning. Anyways, my name's Najarro, and I look at stocks. Said a few questions or comments on the chat, and we can whatever stocks you guys. Let's start off with what's happening today. Everybody's having a good day. Everybody's ready for the weekend. It's actually been not too bad of a stocks. We've had a few days. I think yesterday was red day. Bad. Um, Fair. Let's go. Fed hasn't ruined the market yet. Yeah, today we're saw some reports. So let's see how things end up. Right now, pre-market for a big green, not much. Right, Nasdaq is up point. Russell is up point. Well, so we can see a nice amount of green. Hopefully, stay that way. But just looking at the charts real quick, looking much of a technical guy, but just Russell for growth stocks, right? They topping off around these levels. So I wonder if we're gonna break out of it. Mike's going in and out. Thank you, Mr. Bear. I had my gain down a bit. Hopefully, it should be better now. Testing, testing. 1 2 1 2, Mr. Bear. But yeah, look. I mean, this is it. It does seem like right now. I'm looking at the Russell. It seems like this level keeps topping off, and then it pulls back down. I wonder if that's gonna happen again. But that's just kind of interesting. I actually haven't looked at it for some time. But that's something to keep an eye out. Let's see what's happening. Anything trending right now? Is it still? It's still like a meme stock type day. We have Corsair. Wow, Corsair is down 5% today. I wonder what's happening here. Let's take a quick look. So Corsair is down about 5%. I don't think they reported earnings already, so not sure what happened there. What else do we have? We have CCIV up 4%. I know Tesla has been down recently. Ford is up 2%. Ford is just killing it nonstop, right? Up 7% yesterday, up another 2.7% today. This one's actually going pretty impressive, if I may say. Anything else do we see? PSTH. Not sure what PSTH is. Is this a SPAC? This is, right? I think. Not sure. Let's take a quick look at earnings. We had some earnings yesterday. I think CrowdStrike was the only one that I really cared about yesterday. CrowdStrike and DocuSign. I'm gonna take a quick look at how they did. Let's see CrowdStrike. All right, so CrowdStrike did report earnings yesterday, but the stock barely moved. It seems it's up 0.3%. What else do we have? We have DocuSign. Let's take a quick look at DOCU. Mr. Bear, do you know what's the SPAC? It is. So DocuSign. Oh wow, this one actually did some great earnings. It's up 7% for the day. What else do we have? We have Broadcom. Broadcom stock gave go. That one's up 0.3%. So we have some winners and some not big losers. Check Discord. I provide some DD on the deal. 3 companies for the price of 1. All right, let's see if I can pull that up. Mr. Bear, read the article. The deal is more simple than it seems. We had 5 billion. Bill took 3.5 out of 5 billion and bought 10% of UMG. All right, this seems pretty interesting. I'll have to take a quick look at this one in a bit. Let me just open it up, Mr. Bear, and I'll look at it later. Thank you, though. What else do we have? So Broadcom was up. What else do we have? I don't think I have any. Sumo, I know that's in the software world. I don't really follow it, but Sumo's down 1.3%. And what else do we have? We had Slack. I forget what Slack stock work. Now it's up 0.2%. So not much movement here. it seems. I think the whole world is still worried about things like AMC, which was pretty crazy yesterday. AMC stock is down 4%. Yesterday was pretty down, and then it ended up at least breaking even. Obviously, I'm not touching any of these stocks. I'm not a trader, but if anybody here is a trader, best of luck to you. There is a high short rate interest on Corsair at home. Is there? Let's take a look at Corsair. Short. Oops, wrong one. Corsair. Stock short interest. And that's weird. I wonder why right at home. That this one is actually not a bad company in my opinion. I don't own it. I don't have shares of Corsair, so it's not like I'm trying to like really talk it up. But Corsair doesn't seem bad. It is profitable. The overall, they're seeing strong growth. They have a strong balance sheet. So this one's actually pretty interesting that there is such a huge short volume ratio of 14%, right? I mean that is pretty a pretty penny there. I mean, what's the typical short interest rates on stocks? I just want to let's see, and short volume ratio is it's 14% here. I just want to take a quick look at some other stocks too. Let's take a look, for example, Nvidia. Oops. What's going on, Electric Soldier? So Nvidia has like a 22% ratio. Take a quick look at Unity. Unity has an 11%. That's actually pretty high. I didn't know Nvidia was that high in the short volume ratio. But yeah, Corsair at 14%. I have to take a look at Corsair news. Anything interesting happening? Or actually, maybe here we can find out. So StockTwist is just pretty easy place to find out. Just some quick news of what's happening, and it's pretty funny with the overall comments. Put the shorts in cardboard. I don't see anything really happening with Corsair. Oh man, I definitely have one of these, right? A Stream Decks definitely helps out with streaming. Let's take a look at Corsair's investors relations. So is anybody looking to buy any stocks today? No, there doesn't seem to be anything out recently. Let's see, what else do we have? So we checked our earnings. Earnings were okay, nothing crazy. Today we have no earnings. ACG, are you worried about growth stocks in an inflation mate? And no, personally, no. I mean, ACG, I invest in it. It depends on the growth stock, right? Most of the growth stocks I invest in are somewhat profitable or expected to be profitable within the next few years, and also have some positive cash flow from operations. So I do believe these companies will do just fine. At the same time, ACG, I don't just have growth stocks. I also have what I call the value growth stocks, which are some big players like Google, like Microsoft, like Nvidia that are still growing at some strong levels and provide some decent earnings and some decent cash flow from operations. So I'm not really worried, especially for me. I'm a long-term investor, right? ACG. I have time is on my side for the market, and I can take the volatility. There might be some investors who can't take that volatility or take some of the red days, but then maybe growth stocks is not the right play. Are you ACG? Are you worried about growth stocks right now? And what are you investing in, if I may ask? Corsair was 23 interest. Oh wow, interesting. That's actually pretty insane. That it was that high 3 days ago. And yeah, it's a nice company. You own it. Best of luck to you, Adam. Um, for sure. So let's see, what else do we have? So David, what's going on, David? You want to take a look at Root? Sure, we'll do that in a quick second for you, David. And if anybody else has any stocks, feel free to post on the comments. While you guys are here, make sure to hit the thumbs up as well. It really does help with the channel. And give me 1 second, guys. I need to set something up really quick. All right, so there we go. So I just wanted to see, so jobs reports, U.S. added 5,000, almost 560,000 jobs in May versus 671 estimate. A little bit higher than last month. They disappoint again, it seems. Unemployment rate fell from 5 to 5.8 from 6.1, which was better than the estimate of 5.9. All right. Markets were not disappointed by the report. Stock market futures actually rose, with investors continuing to bet that the measured pace of job gains would keep the Federal Reserve from raising interest rates and tightening monetary policy. That's one thing, right, that investors are pretty excited about right now. But we'll see how things are going to play out. So let's see, stocks making the biggest moves today. DocuSign up about 7%, 5 below. So ACG, I mean, one thing, not a recommendation, right? But one thing I was thinking of doing is I invest I want to say I invest every week or every 2 weeks. And I feel most of my money goes into growth stocks, but maybe I might split a little bit more into like growth stocks and value growth stocks, right? And like I mentioned, value growth stocks are just companies that are still growing at some strong levels, but are providing at least profitable earnings and are already providing positive cash flow from operations. So that can help me out in a bit. But I do think growth stocks have taken a nice beating right now. If we take a quick look, for example, at TradingView, let's take a quick look at some charts, right? Let me take a quick look at ETFs. There is this value ETF. I forget what it's called. Let me find it real quick. Deep. So Deep Values is around here's Deep Value ETF. And if I'm taking a look, like first thing I'm seeing is it's looking a little bit like growth stocks were back in the day, where they were a bit overextended, right? So I can see they're a bit overextended from some of my moving averages. But when I take a look at some of like my growth stocks ETFs, even though I don't follow ETFs, right? ARK is a perfect example. It's nowhere near overextended compared to how it previously was. So at the same, I don't mind doing a bit of both, right? Maybe some value plays and maybe some growth stocks, just to get the best of both worlds. But yeah, for example, in my portfolio, if you take a look at companies like Berkshire, which I own, I still have a small position, way overextended compared to, let's take a look at maybe, no, not Facebook, maybe some a true grower like NIU. So things are looking a bit different right now. I definitely want to invest a little bit more in growth stocks right now compared to value plays, just because the way charts are looking. And let's see what else. Stocks making the biggest move. Mongo, the data platform. Let's see. Broadcom. Nothing really impressive happened after market hours. So let's take a quick look for you, David. So you want to take a look at Root stock. And if anybody wants to take a look at any other stock, feel free to post on the comments. Any thoughts on Splunk? So I don't have Payvan shares on Splunk, but we can take a quick look at the company and just look at what how the market is looking. So right now we're looking at Root. This is an insurance products and service in the United States. They have about $2.4 billion market cap. So it's not the biggest company I've seen. It's not the smallest either. Future growth. This company is expected to grow 32.6% on average for the next 3 to 5 years. One thing that it seems like COVID could have affected this business a nice amount. We can see June 29th of 2020 kind of peaked, and then it kind of went down from there. And there's not much growth expected for the next year. But there's not too many analysts looking at this company. Unfortunately, the first thing ACG this is an insurance company. So insurance companies are usually and thanks ACG, I appreciate it. David, insurance companies are a bit different. You normally don't look at them with cash flow from operations or earnings. This is very similar to how, for example, which one is it? Which one's the Lemonade? So if we take a look at Lemonade, right? If you take a look at their cash flow and earnings, it looks pretty negative. These are how normal insurance companies look like, and I hate that. I'm usually not a big fan of it. From their health seems pretty strong, though they have plenty of cash and short-term investments compared to debt. What I would definitely want to take a look at, David, is take a look at this company's loss ratio. If you take a look at their earnings, that's what really drives insurance companies. You want that loss ratio to be like below a 1 or 100%. For example, for Lemonade, I think it's about 70 something percent. You want it to be somewhere around those levels, or want it to be decreasing. So insurance companies are usually not my cup of tea, David Hang, but definitely take a look at certain things from there. And let's take a quick look at maybe some charts, see how things are looking there. This one has just been downtrending. I'm guessing this is considered a growth stock. We saw with how it's growing, how it's expected to grow 32%. So I'm guessing growth stocks has really, the overall growth movement has really hit this stock. So the only thing we can see technically is if it falls below $8.40, there's really not much volume going under there. So that's something to be careful about. So Parvon, let's take a quick look at Splunk. Let me close some of these. Madrid Capital no longer owns debt or equity in AMC. It's crazy how AMC is breaking news right now. Investments firm Madrid Capital has exited both in debt and equity options in AMC. I mean, I'm not right. I don't know what the overall thing within AMC, but I do believe this was a great move for the overall CEO, right? He had to, it made sense for him to sell shares yesterday, 11.5 million shares on Thursday for $587 million. I mean, moments like these short squeezes or whatever's happening with AMC is really helping out these companies in that level where now they're able to liquidize their money, some of their shares, and kind of have a nice amount of cash balance available to them. So let me see. Let me just close out some of these stuff. I don't think I need them anymore. I don't think I need this. I don't need this. I don't need this. So to see how our stock's looking right now. Are things still looking green? Yeah, so hopefully we have a nice green. ACG, do you like GPK? Let's take a look at GPK. I actually haven't heard of that one either. Graphics Packaging Holdings. And my bad, Paven, we're actually going to take a look at Splunk in a bit as well. Let me just reopen that so I don't forget. Splunk Investors Relations. But Graphics Packaging Holdings. So this provides paper-based packaging solutions to food, beverages, food service, and consumer products. This is actually pretty cool, right? This is a market, ACG, that one doesn't know exists, but it's actually needed for our everyday lives. So it's one of like those cool, boring stocks. So this is ticker GPK. Future growth. This company is expected to grow 2.5% on average for the next 2 to 5 years. One thing they are expected is to grow those earnings at pretty strong levels. So that's what I'm liking right now. Revenue, not much, but those earnings are growing at strong levels. They are positive in cash flow from operations. So this is a company that I wouldn't mind if their balance sheet wasn't that strong because they are profitable and positive. They have about $3.6 billion in debt. So we can see they are a bit leveraged. Again, I want to say that's okay because they are positive from income right now. If they have some form of dividends, yes, they do pay some form of dividends, about 1.7% right now, which is not horrible. And let's take a quick look at their ownership. Right now, this company is mainly owned by institutions. For me, ACGL, this is not a company I would personally own. It's not a fast grower to my taste. I normally invest in companies growing a little bit faster. Even if they are profitable and positive in cash flow from operations, I want them to be growing at least maybe 7-8% their revenue for the next 3 to 5 years. But this is an interesting market, right? You're getting more stability here. You're also getting you're getting a form of dividend with this stock. If we take a quick look at the overall, stocks, I'm not seeing it's not too overextended from the moving averages. Um, so this is one that it seems investors since like November started really liking. I'm guessing it was more of a more movement into a value play. And we can see it's just been trickling up and up and up. So in the past few months, it definitely has done great to investors. Um, I do want to say, right, it's not overly extended. So if I was to purchase this at these levels, is where I purchase a small account, a small position, medium position, and usually super large position. And that's how I normally trade. If it's everly overextended like here, if I like the company, I would buy it, but usually buy super, super small. So here I'm pretty much, if you want more of like a dividend play with somewhat growth, it's what it seems. So Splunk just reported earnings, right? Let's take a quick look at what at supplement slides that they provided. So I don't really understand Splunk right now. But what can we see? Cloud, all right. So their annual recurring revenue has grown to 83% of their total revenue. That's pretty impressive. Their non-cloud annual recurring revenue. Good morning, Lucy. How's it going? Non-cloud is also growing, even though it is decreasing percentage of total revenue. It is increasing compared to the last quarter. So this is pretty good, right? You're seeing revenue growth from both year to year, and you're seeing revenue growth quarter to quarter for both cloud annual recurring revenue and for non-cloud. Total annual recurring revenue is also up, but it's now a smaller percentage of total revenue. What else can we see? It seems one thing that I'm guessing might be slowing down is total net new annual recurring revenue. It's now 103 compared to the same time last year was 95. So it seems most additions tend to be in quarter 4 of 2021. This is what normally happens with software companies. It's usually at the end of the year when they announce more customers, when they announce more products like that. So let's see. Total bookings were up, which is impressive. I don't want to take a look too much, but let's take a quick look here in simply Wall Street. So Buddha Vibes, what do you think about AMC situation? Do you think the squeeze is going to happen? And do you have some shares from AMC? Thanks. So Buddha, I am not a trader. I'm more of a long-term investor. So something like that is not something I would personally invest in. It doesn't mean it's a bad investment or a bad trade. It's just something I believe it's much more risk for me, as I'm so busy kind of like looking at other stuff, opposed to really see how the short squeeze or whatever is happening. So I don't have any shares, and I don't have any plans on buying shares. But that doesn't mean people can't make money. I just want to say, if you do enter AMC, remember the risk, right? Stocks like that can just go up like crazy and then pull down, and you can end up being a nice back holder for some time. So yeah, it's one of those. For me, I might get some hate for it, but stuff like AMC, it's not an investment. It's more of a it's more of a gambling play, right? It can go either direction. So in the gambling play, things can go up really good, or things can almost go back down to pretty bad levels. Road Taco, are you going to watch any E3 presentations? Are we talking about E3, the gaming? About the gaming E3? I didn't even know it's up. So E3, let's see, take a look at E3 2021 schedule. Oh yes, it is. I normally don't. I usually just take a look at what really pops in YouTube, right? Roll Taco. So if anything is really interesting, I'll look at it there. From an investor's point of view, I don't think there's much information. This one seems pretty interesting, right? Xbox now with this new Batista studio. That one might be a cool showcase. Um, I, I, I don't, like I said, anything that just looks super popular, I don't think would really move the stock price in any of these gaming stocks, Rotaco. But it would definitely be trending on YouTube for sure. I think, I mean, I don't think Xbox and Bethesda are gonna announce anything crazy. I don't think like anything. They might announce some great games, but anything really moving of companies' financials, I don't think they're gonna release anytime soon. Um, where is the expo, by the way? I want to take a quick look. Yeah, so agree, right? Nintendo might show off their new Pro, Switch Pro, and I think it's impressive how Nintendo Switch just keeps kind of refreshing their Nintendo Switch, which is pretty impressive. Nintendo will hold Switch games, yep, Treehouse. Um, but at the same, like I said, Rotaco, I don't think Rizviz was going on. Vacation was amazing. It was super amazing. I don't know if you guys could tell. Yesterday, I dropped like 3 videos and a live stream just because I felt so refreshed. It was definitely a good time. Um, so let's see what else. Lucy, what you want to take a look at Palantir? So Palantir is one I I wouldn't mind entering in. We could take a quick look at Palantir, Lucy, but let me take a quick look at some of the questions I have right now. ACG DraftKings, a good buy for today. ACG, what are you looking for? Are you more of a long-term investor or are you more for a trade? DraftKings, I really do enjoy. It's definitely been pulled down a nice amount again, right? Net advice. But DraftKings at these levels, I wouldn't mind investing in. I already do have a position in it, ACG. And there's other stocks I would buy a little bit before DraftKings. But at these levels, I wouldn't mind entering in at all. And Dennis, do you think NEO will go down back to price range of 30 to 34 short term or upcoming? I mean, things like that, right, Dennis? It's very interesting. There is always the huge potential of things pulling back down, but especially in the short term of things. Um, it does look like it could probably retest those 30 levels. It's always the possibility, right? Right, Dennis. Short-term movements like that can happen out of nowhere. There could be a random news tomorrow about another EV battery shortage or something like that that can just drive the stock price down for a few days, for a few weeks. So short-term movements. If you ever ask a question like that, Dennis, do you think NEO will go down back to price range of 30 to 33? My answer would always be yes. There's always a chance. How much that chance actually happening? Not sure. Personally, I'm not too. There's only a few EV stocks I own right now, and that is NIU. NIU is one I own right now. Tesla is another one that I own, and ACTC are the only EV plays that I own right now. So is NIO a good investment for the future, Buddha? Like I said, those three I don't invest on NIO. Not sure why. It's just not one that I personally like. So those are the other ones I have instead. So market opened up. Let's see how things are looking right now. Things are still pretty. Celsius is up 2.3%. This one is just killing it. ACTC, which I was just talking about, is up 2.1%. NEO, which I was just talking about, is 1.6%. So it seems to be like a nice green day. We have a bit red. Tencent still taking a hit. Which is pretty interesting, right? Chinese stocks are still taking some pain right now. We can see overall market a lot better than how it opened up yesterday. I hope it stays like this. Yesterday we started a little bit on the red side. What else? CrowdStrike, nothing really moving my portfolio though, minus that Celsius. Let's take a quick look in a few minutes. Nice, Rizvis. You grabbed a Peloton position. Is there, what was your main reason for it, Fizz? It definitely is it's definitely sitting at good values. I think this has definitely provided a nice support levels. Even though it broke down, it pulled right back up to it. So Peloton, I had a small position back in the day. I don't think I have it anymore. But Fizz, if I mean, what was your main choice of it? Unity, let's go, man. Unity, you have to keep, you have to finally break out of this trend. Nvidia, Fizz, Nvidia is killing it. It's looking way overextended right now. But Nvidia is definitely being a monster right now. I can't believe it. I wonder if everybody's just getting excited about the overall stock split. I mean, earnings were good, and it's just been trending since before earnings though. So it's actually pretty insane how Nvidia has been moving. Versus, I did a lot. Oh, you also did buy a bike. I remember that. Yes, even I bought a bike to see if I liked the bike before starting a position. I have 4 links I can send you later if you're interested in Peloton. I think Connected Fitness is in early days, and Peloton is the leader with the most brand awareness. So that's pretty interesting, right? So Connected Fitness, I wouldn't put it like a metaverse, but it's like, in my opinion, I that's actually a pretty interesting take. It could be like a mini metaverse of like the fitness community, right? So Connected Fitness, you might be onto something there, Fizz, with the overall Connected Fitness world, for sure. It's adding like the, what's going on, Pilot Poncho? Hope you're having a good week. I'm glad to see you back. I know I've been away for some time, so it kind of threw everything off. And it has Netflix, social media, and gaming aspect all in one. So that's pretty interesting. I might have to. I personally don't know any friends that have. Actually, I do. I'm gonna have to talk to them. Maybe I can see. I can take a look at the bikes and take a look at it. But that seems pretty interesting. Fizz, I've never gone to. Hold on. Because I've never gone to a gym before, and I've been using the bike every day for 2 weeks since I bought it. It's gamifying, and that's the thing, right? The overall gamification, the overall, and a reason to do it, right? I feel like humans. That's why skills is to somewhat cool stock, just because it gives you a reason to do something outside of just playing for enjoyment or doing it for your own health. You have a reason to do it. And that gamification, that's actually pretty cool, Fizz. Yeah, Pilot Poncho, I saw, right? Corsair has definitely taken a beating. Let me just take a quick look at stocks right now. I knew I should have freaking purchased stuff yesterday. Maybe Tencent might be looking attractive right now. I have to decide what I might purchase this week. I think I might go with some techie. We'll see. But right now we can see ACT up. Overall market is looking pretty good. I'm happy with the way the market is doing. Let's take a look at Corsair. This is insane. Corsair is down 6.5%. There really isn't any news that I saw. What is really driving this stock price down? Stock to it. Let's take a look at Corsair. Holy moly, ignore the noise. Any news why the drop? It doesn't seem like there is a real reason for the stock price to drop. Good luck to all. Yeah. So it seems like the CFO might have sold some shares. Is that what's happening here? Let's take a quick look at Lazy FA. I think usually I can look at news there. Give me 1 second. Let me just log in. So usually I think I can look at news here. The dashboard, and let's take a look at Corsair. Jabiki, hey Jose, bought Nvidia and ASML earlier this week. So far, so good. Thoughts on AQSM and AEVA? Thanks. We could definitely take a look. Pilot, I watched yesterday's live stream, and I liked the last bit when you discussed the growth value companies that will fare better during inflation and interest rates. Man, I don't even remember talking about something like that, Pilot. But I'm glad I provided some form of value. Jibiki, and feel free, Jibiki, which one do you want to take a look at? And if someone posted a stock they want me to take a look at, feel free to repost. Sometimes I forget. So recent news, I don't see anything really happening here for. So there was a filing yesterday in 6/3, and it was updated late at night, it seems. Let's see the statement of ownership. So Corsair, I mean, see, this is not much in my opinion. It seems like the CFO, is this the CFO? Yeah, the CFO sold some shares. So he sold about, what does code M mean? Instructions A. I know, freaking, they should give us with the instruction. But I know he disposed of a nice amount of shares. But I wouldn't understand why that's, and then he disposed of these. So he got some shares, he acquired some shares. I forget what code is. I wonder if this is some form of award that he got on 6/1. He got awards here and here. He got these stocks at a super low price, $7.78, and he obviously sold them out at $31 and $35. So I mean, sometimes people need the cash. I don't own Corsair. I don't believe that's a reason the stock price should drop this much. This seems like an overreaction in my opinion. I'm pretty sure it's gonna I don't want to say this. I have a high, in my opinion, this is gonna turn around. Good, got a question. I'm a strong believer and subscriber on Patreon of your investment style. However, we can't deny inflation is happening. Interest rates. Question in next post. Yeah, okay. So first, I agree, right? For sure, Pilot. We can't deny that inflation is happening to some extent, and interest rates will rise. I don't think. I always think about it that interest rates will always go up, right? So now I'm waiting for the other question. I agree with those comments right there, Pilot, for sure. I'll wait for the next question. Fizz, did you see that Gravity game Ragnarok Origin X-Pre? No, I haven't, Fizz. I have to take a quick look. This game hits Southeast Asia June 28th, I believe. What are those numbers? Do you have any strategy or mindset to handle this? Any value stocks in your portfolio? Keeping cash at hands to buy back in later. So, Pilot, let me answer that question. First, do I have my strategy? Do I have any value stocks in my portfolio? I would say my closest place to value stocks are I have Microsoft, for example. I have Microsoft, I have Google, I have Facebook. I have a few stocks that are already profitable. So let's take a quick look. So what is inflation going to do? Inflation and higher interest rates are going to hurt companies that are not making money right now. So companies that are not profitable. Is also going to hurt companies that are heavily leveraged, right? These are companies that have more debt than cash, because if interest rates rise, most of their debt has some form of interest rates plus the current prime rate. So if interest rates rise, they're going to be paying more in interest. So I do believe both inflation rate and interest rates hikes are going to hit the companies that are not profitable right now, that are not positive in cash flow from operations, and that are not and the ones that are super leveraged. Luckily, in my portfolio, Pilot, you would see my portfolio. Most of my stocks are nowhere near leverage in debt. I make sure for that reason to, when I ever buy a company, that they need to have a very, very strong balance sheet. If I take a look at my portfolio, I don't think any of them would be. I think maybe my most leveraged company would have to be Disney. And Disney, just because of the overall parks that they own, that's probably my heaviest leveraged company. Let me take a quick look at Disney. So if we take a look at Disney's health, they're going to have, compared to cash and short-term investments, they have more debt. This is probably my worst balance sheet I have, but at the same time, Disney is a company that is profitable and they are positive in cash flow from operations. So even though COVID has hit them, I don't think inflation and interest rates will hit them too hard. So my play first is to make sure I don't have too many companies that are heavily debt leveraged. The second thing is I do invest in a lot of companies that are already profitable and earnings. For example, Nvidia, AMD, even though I consider them value growth play, right, Pilot, even though they're in the growth play, there are still companies that are providing me with money right now. So inflation isn't really gonna, I want to say, affect their earnings too much. So I have like Nvidia, I have AMD, I have Facebook, I have Microsoft, I have Google. These make up a good portion of my portfolio. So with my current portfolio, I'm not too worried, right? Now, how am I gonna play the future? Is the next question. Am I gonna change my overall investment style? I don't know. To be honest, I don't know right now. Maybe as things get a little bit scarier, I might change my buying positions. I put money to work every single week or every other week. And every other week, I buy a mixture of some growth stocks and I buy some mixture of, I would say, value plays as well. I don't do heavy value investments. That's just not my style. And I believe I am super young, right, Pilot? I'm still 20. I'm 28. Yeah, I believe I'm 28. Time is on my side. So at the same time, I don't believe that value plays, even for a short term, 1 year, 2 years, would really benefit me in anything. So I think value growth stocks are going to be the ones that really will push my portfolio in the long term of things. That situation might be different if maybe I was 50 years old and I was thinking of retiring in the next 5 years. Maybe then I would switch into more maybe dividend plays, more value plays, opposed to the growth style investment. And then the final thing is, do I have cash outside? So I do have a nice amount of cash position outside of my portfolio. Pilot Pancho, right? I want to say I definitely do have a nice amount of cushion room outside of my portfolio in cash accounts or some form of short-term investments like money market accounts. But I only will use that money if there is a heavy drop. Like I'm talking about a 20% drop. If there's a 20% drop, I definitely will pull some money out of those accounts. But unless there's something like that, I'm just gonna continue with my overall weekly investments. So Pilot Pancho, that was super important to me, and thanks for answering. I'm keeping 50% cash in hand to buy more of these stocks if they drop with interest rates news. I also believe they will. So that's pretty good, Pilot. So Pilot, let me ask a quick question. This 50% cash on hand, is this 50%, is this cash your total cash? And hopefully, I'm not trying to be too picky into your business, so feel free not to answer. But for example, right now, my portfolio, I say I have almost 0% cash in my portfolio. But in actual cash position compared to my portfolio, I have about 50% of my portfolio size in cash. It doesn't mean that I'm not planning on using that cash into my stocks anytime soon, but that's how much I have outside. And that's what I consider a cushion room, right? It's just in case I lose my job, right? Just in case my wife loses her job, just in case some form of emergency happens. We have a huge cushion room available to us. And it's not just for stock investments, but if stock investment does give us that opportunity, it's ready for me to like start blasting. So yeah, I was wondering if you have a difference between cash for investments and just overall cash in general as well. So David, what percentage would you consider tier 1, tier 2, tier 3? So tier 1s are about, I want to say 30 to 35% of my portfolio. Tier 2 will probably be a bigger position. I think so. Tier 1 is 30%. I would say tier 2 are about maybe 50%, and then the rest is tier 3. David. But remember, tier 1 is only 4 stocks. So 4 stocks make up about 30% of my portfolio, David. Tier 2 stocks, I have about 20. about 20, maybe 25 tier 2 stocks, and those are usually like 2.5%. And then tier 3 stocks, it's probably like 15, but they make up about 1%. So most of my portfolio is within 4 stocks, David. And my 5 biggest stocks are AMD, Unity, Nvidia, C, and Cerence, and those make up about maybe 40% within those 5 positions. AMD is not a tier 1, David, in my portfolio, but it is one of my biggest portfolio companies. Since the move, AMD down. Nice. Low, maybe I moved some of my Nvidia back into AMD. Now just rotate between the two forever. Since the move, not gonna lie, not gonna lie, Fizz, I do think now that might be an interesting play for sure. I personally wouldn't do it just because I don't like selling in and buying into. But if I did, I wouldn't mind doing that, selling some out of Nvidia and going into AMD. Just because I do believe AMD, even though I'm a huge Nvidia bull, I do believe AMD is ready to take off pretty soon. It's just been consolidating at these levels, and this one is one that will be ready to blast off pretty soon. Pilot, happy to answer. I'm older and have enough for living costs and retirements. No debt. Nice. So I worked hard, done well, and been lucky. I want to retire in comfort style though. Pilot, that's pretty awesome. That's the goal, right? It's definitely have enough for living costs and retirements. No debt. House paid off. Sometimes I wish I was at those levels already. The 50% is referring to investable cash. I have bought some Verizon and Bristol. Value is around 20% of portfolio. Oh, nice. Okay, that's actually so yes. Okay, so you have this is considered investable cash. You have some other cash position as well, which is pretty interesting. So for me, I at the moment, for example, I have 0% investable cash, but I have about a 50% cash position outside that I can use for investable cash if needed. That will only open up if the gates really want to. But that's actually so. I mean, I can't speak. Right, you're a bit older, right, Pilot. I would think if I was older and getting ready to retire, I don't know, right? Maybe once I get to that mindset, it might be different. But I would probably start looking at more like growth value plays, like companies that are growing at some strong levels, but are still providing some form of earnings, right? I think maybe I would be a little bit heavy in companies like Activision, which is pretty weird, right? I feel maybe older people don't really look at Activision, but Activision, I believe, pays like a 1% or something dividend, right? No, they're not actually that high. I actually thought they were higher, but they pay about 0.5% dividend. This is a gaming stock, so they're hitting. I would focus. So I think if I was older, I would focus in the same markets I'm in right now. So I'm in the gaming market, I'm in the social ads market, in the subscription market. But I would look at companies within those markets that maybe are not growing as fast, but might be providing me with some other type of value. They might be profitable, right? They might be giving me some form of dividends. They might be positive in cash flow from operations. So I would focus a little bit more on there. So for example, right now, I have Unity, right? Unity is a heavy growth stock. But instead of Unity, maybe I might be in, because it's in the gaming, I might be maybe in like Activision and EA Sports, which are still in the gaming community, just not growing at fast levels, but are profitable in earnings, are positive in some form of dividends. Oh, Pilot, still not. Oh, okay. So you got time on your side for sure. And at the end of the day, Pilot, right? It's only what really works for you. You have to understand what you are emotionally ready for, right? The way I might, and emotions aren't that bad when I say it, but probably my emotions are different from yours, right? I really wouldn't blink an eye if Unity continues to drop. I would obviously suck, but I wouldn't sell out unless something fundamentally changes. Maybe it might be different for you. So at the end of the day, it's always what works best for your gut, right? I do feel your gut really helps you understand how much risk tolerance you have. And having lower risk tolerance is not a bad thing. is one should always invest to what their risk tolerance lets you, because once you go over that risk tolerance, that's when bad moves start to happen, for sure. So what is your favorite mobile gaming stock right now? I don't believe I would say from the bigger plays, ACG is Activision for sure. Even though Activision, you might be like, hey, that's not a mobile stock. They, I believe, will soon become, they own Call of Duty Mobile, right? Hearthstone. They're progressing into the Diablo Mobile. They own Candy Crush. So Activision is probably one of my favorite mobile gamings, with a company that is profitable, positive in earnings. Obviously, another play that I enjoy ACG would be Unity, just because most of the most of the games, mobile games are made to Unity. Gravity is another one. Yes, Fizz, another one for sure. I don't know why I put Gravity. And what two that I don't really talk about too much are Play Studios. I think Play Studios is pretty interesting for sure. This is a SPAC right now. They are more of casino games, and I can see them continue to grow. So Play Studios is one, and the final one is Skills. Even though this doesn't really make most the mobile esports platform, I do believe are great. So those are the four. If you're looking for more of a value growth, it would be Activision. If you're looking for really growth stocks, it will probably be Unity. And more speculative plays would be Play Studios and Skills, in that order. It still hasn't. I don't think the stock is Play Studio stock. I think it's still under the SPAC. Yeah, it's still under the SPAC ACAC. And this is awesome. I mean, look, it's a SPAC that's sitting at its nominal value. I mean, not the SPACs have been running. I think this one's being slept on for sure. So yeah, this is one actually. I might think about it. I might have to look at it. MGM backs Play Studios via merger. Thanks. There's another one that went public that does casual casino gaming. I haven't really heard of that one. Hey, look, there's me. I can't remember of the other one, Fizz. And I'm sorry, guys. I know I answered some questions. Feel free to post any stocks you guys want me to take a look at right now. In the meantime, let me take a quick look at how the market is doing. I know this is about 15-minute delay, but Nasdaq is up 1%. Let's take a look at my stocks. Celsius, this is insane. Celsius has been a monster for sure. It's up another 5.5%. The only thing I hate is when it gets GNOG Roll Taco is, let's see. Oh, Golden Nugget. Yeah, but this is more of true gamification stocks, right? This is more gambling stocks. Where Play Studios is a different story. Play Studios games are more free to play games, and you get real life rewards from them. So here, like, I'm pretty sure you could gamble with them, but most of their games are actually, you can play without gambling at all. They're not iGamification plays. They're just actual games that give you real rewards. Jose, it's PLTK, Stock Platica. Maybe we can look at it. Okay, yes, that one. I remember that one. I feel like, let's take a quick look. But first, let me take a quick look at stocks. So I was mentioning, right, Celsius. I hate when stocks are like this, right? They get overextended when they pilot. Thanks. Hope you have a good day, man. Take care and appreciate the support. It really does mean a lot, and it helps me continue to do this. Renegade, what's up with Huya and Doju? Huya and Doju are just dying right now. I'm still bullish in Huya though. No real changes to my thesis. Renegade. Right now, it seems like overall Chinese stocks are still taking a big hit. And I guess investors are worried about the Huya Doju merger. To me, I really like Huya even without the merger. We have Nvidia up another 3%. This is about to break 700. This is insane. But again, I'm not really liking the overextension here. But this is pretty impressive. What else do we have? Do we have anything? Sorens pulled up like crazy. I've been sleeping on Sorens. I did build up a nice position in the 90s, and it's now sitting at 100. So this is looking pretty good as well. Let's see. I think I know what I might add today. But Ritzvis, let's take a look at Playtika. Let me close this out. How is Corsair doing? Corsair is still down 6%. Still taking that hit, right? Let me just close out of some of these stuff. So Playtika, this is ticker. I forget what ticker this is. Yeah, I mean, it has been insane, Fish, for Celsius. It's actually, even with my addition right now, it's a 500% gainer for me. It's insane. It's made it to like my top 10 positions without barely being a position size. And that's why I enjoy even a small investment in a stock can really make a huge difference in your portfolio. I think it was like a $800 position, and then it's now sitting at over $4,000. That's why even tier 3 stocks, and so many people might answer, Jose, why are you in tier 3 stocks? Why only invest 1% of your portfolio? Because I've seen the growth that a big player can do. Celsius is the prime example for it. PTD, I think, was another one. I kind of did sell out positions over time over PTD. But that one was such a small portfolio, such a small position, and for some time it was one of my biggest winners. So Playtika Holdings, this is traded under the ticker PLTK. Future growth. This company is expected to grow 7.1% on average for the next 3 to 5 years. Normally, if you guys follow gaming stocks, forecasted annual growth rates for gaming stocks are usually on the lower side because it's the way their business works. They release a game, revenue goes up, revenue then drops down after no new games get released, then new game comes up and it goes back up. So revenue is very up and low, that really messes up with the overall forecasted growth. But this company is profitable. They are positive in cash flow from operations and have very strong values there. That's actually pretty impressive. This past year was almost $500 million in cash flow from operations. And what was their market cap? Their market cap was $10.7 billion. If we take a look at their health, unfortunately, they have about $2.4 billion in debt and $1 billion in cash and short-term investments. This is something I want to say I don't like, right, Fizz, about them. Most gaming stocks that I've seen, we've seen Activision, we've seen EA Games, Take-Two Interactive. All of them have a bigger cash position than debt. So this is probably the first thing I wouldn't say I don't like. Obviously, we would have to take a look at that debt to see how long it's due. If it's due 10, 15 years from now, then maybe it might be a different story. But that would be probably my first red flag. If we take a look at ownerships right now, individual owners own about 12.9%. This company, Alpha Frontier Limited, owns about 52% of the business, though. I really want to know who those are. I'm guessing this is the individual who owns a good portion, about 10%. And if we take a look at Playtika, their games are pretty interesting, right? They're definitely trending mobile games. I feel like you could, Best Friends, I feel like I've heard of that one. It's been very popular. I get they are being backed up, it seems, by like virtual slots, casino gaming, Caesars, Bingo, Vegas Worlds. So it seems like a lot of gamification games. Not a company I personally enjoy too much. Maybe they might do something else outside of it that I would have to look at. But I think they own. There was something else that many people liked about Playtika that I don't see right here. Maybe you can remind me. Oh, okay. So these are the actual funds. So they're not iGamification games. They're just real plain mobile games. But I remember when this company came out, Fizz, everybody was super excited, and I forget what the real reason was for it. Maybe it's just that cash flow from operations. They definitely do make a nice amount of money there. ACG, do I have shares in MasterCard or Visa? No, I do not. I used to have shares in Visa, I believe, but I did sell out and bought more growth stocks with them. My closest play to them, ACG, would probably be PayPal. I do have some position in PayPal. But guys, this is it for the live stream today. I'm happy I was able to do 2 days back to back. My schedule is back to normal, so I will be on Monday at 9 o'clock. Thanks for everybody that show up. Feel free to always come up with stocks. We definitely will. I enjoy taking a look at different stocks and just ask questions, right? I try to be as transparent as I can. So take care, guys. Have a good day and see you next time. Biz, I hope you have a good weekend, man. It's happy to see you in. And I promise not to take a super long vacation anytime soon again. So take care, guys.